Not so much. I mean, the direct impact of the whole US-China debate doesn't hit us that much because we don't have too many goods shipping from one continent to the other. What we do see, however, is in the China is some nervousness, consumer nervousness, and that is never good for a product like paint. What we have seen, however, is that the market where we predominantly play in, which is the higher end market, that continues to move very well. I mean, our business in China is pretty profitable. What we have already since the last quarter have stepped away from is, I would say, the lower end of the market, because that was difficult to offset raw material costs. It wasn't exactly not delivering, it wasn't delivering anymore to the bottom line. And that explains also some of our volume numbers. The volume numbers is really business where we stepped away, auxiliary products, resin sales, we had more on an opportunistic basis. The economy lines in China where we felt this is just shipping product around and there is no margin in it. So as we couldn't get our margins back up, we stepped away from that. So we do see a nervousness in those markets, I would say, at the lower end of the market rising. For us, having a semi-consumer product, it is always a worry on what consumer sentiment is. So of course, in that respect, we keep our eye on what's happening there a lot.
Thierry, can I ask you more broadly about the sector? Because your company, of course, was quite in the mix when we talk about deal activity last year. What do you see for this year? Do you think we're going to have more consolidation in the chemical space? Well, I presume when you talk about the chemical space, you talk about paints and coatings. So the whole who's going to get together with whom last year, of course, has got everybody speculating what's going to happen next. I think we've been on record now for saying, well, with our self-help program, the 15 by 20, AkzoNobel is the world leader in paints and coatings. Maybe the performance was lagging a little bit, and that's what we're stepping up quite dramatically this time. So that, frankly, takes the bandwidth of myself, my management team, and the whole organization. Doesn't mean that we are blind for what's happening on consolidation, but for us it becomes increasingly an either or. Either we mind our own business or we start dating and see what is going to happen. So right now we're really focusing on our own business, but that includes bolt-on acquisitions, as we have done too this quarter with Xylacell, a leader in decorative paints in Spain, Fabria in Romania. So bolt-ons where they make sense and where we feel they can create value. There, of course, we are very vigilant to try to increase our business. But the big combinations, which makes everybody very excited, right now we are really minding our own store because we do believe there's good value-added work to do there.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.